start with some introductions. So Clemens, over to you.
Yeah, pleasure to be here. My name is Clemens Paschke. I'm the CEO of Ziegert Everestate. Ziegert Everestate, part of the Ziegert Group. We are a broker, pretty large broker in Berlin with more than 150 employees and around about 500 million transaction volume a year. And we are serving Berlin, Leipzig, and Frankfurt as markets. And we are focused on projects, so new build mostly, and larger projects beginning up 20 million upwards.
Great, thanks very much. Rainer.
Good morning, my name is Rainer Nonnengesser. I'm representing International Campus. International Campus is one of the first movers in the student housing sector in continental Europe. We are covering Germany, Austria, Netherlands, and CEE, and currently have some 5,000 units in operation and another 3,000 under construction.
Perfect, thanks very much. And Manuel.
Yeah, thank you, Richard. Good morning, everybody. It's a pleasure to be here and speak to you. My name is Manuel Böscher. I'm representing Swiss Life Asset Managers Germany. Me and my team are responsible for all transaction in the international sector. International means the Nordics, Eastern Europe, Austria, and the Netherlands. And for sure, we have one flagship fund. It's a European Living Fund as joint venture together with Decker Immobilien. And we have the special fund especially created for international investments in residential sectors.
Perfect. Let's start. So we've got a really interesting mix there, I think, of both international but also drilling down into some of the markets in Germany. Very relevant considering we're in Germany at the moment. Rainer, maybe just starting with you, I suppose, how do you see the markets at the moment? What's your sense of, I guess, where we are at the moment in terms of residential?
Well, I think looking into the European perspective, most of the rental markets that we see in Europe are dysfunctional, meaning there is a way higher demand than supply. Rents have been rising sharply, and in most of the markets you also see some demographic shifts, and those elements are embedded into, let's say, uncertainties coming from the COVID environment we all have been in the last 18 months. And what we see now, especially in our sector, is that the young people are desperately looking for leaving homes after being handcuffed for 18 months. And we have seen bookings exploding in all our destinations in the last weeks. And we also believe that as soon as the economic trends, meaning business traveling and secondments, will kick in again in the next months, we will also see the long stay segment bouncing back strongly. As regards the investment profiles, we're talking to a lot of institutional investors on which trends are foreseeable, and what is quite obvious is that residential with all its subsets, be it student, be it young professional, be it also senior housing, has a very, very strong argument for institutional investors, as partly they lack alternatives, as office and retail face question marks, logistics seen pricing jumping extremely. So residential, regardless in which market you look in from an investor's perspective, still has, let's say, a less sexy but highly stable profile and is highly sought after.
That's interesting, thank you. And Manuel, just coming to you, I mean, there's a positive view there from Rainer, and obviously in terms of the capital, residential's been gaining a greater market share when you look at the deal volumes. So do you see that as part of something that's related to capital, I suppose, looking at different things that they think are going to be less impacted by the pandemic? Or do you see this as a positive kind of move and continuing that direction for residential?
Yeah, I would say a bit of both. So I can say that especially the institutional investors are looking for stable investments and to bring in the capital, and therefore the residential market, especially the international market, is quite stable, I can say, And I personally have the feeling during the minute we are talking here, the pricing getting even sharper and sharper. So it's really every second. So my personal feeling is that especially institutional investors are looking more and more for the stability in the residential markets. And therefore, I'm not wondering about the total volumes we made in the last years if you see in the residential sector, and it will grow even up, yeah.
Yeah, go ahead, yeah.
Maybe when I may add, so what we observed in 2020, actually institutionals were a little bit on the brake in terms of investing. And what we see, especially in the second quarter of this year, in the third quarter of this year, a high pickup in demand from institutional investors for resis, and also a way higher purchasing willingness. So price sensitivity has been way lower than before. So this is actually really kind of pushing the market and driving the market, and actually leads also to some of the price increases that we have seen lately. And it feels a little bit like a FOMO effect. So a little bit on the brakes in 2020. So didn't fully did all the investments that were planned, and now catching up. And as prices go up quite sharp, a little bit of a fear to miss out the opportunity and not jump on the leaving train.
And if you distinguish between the development side and the investment side, you see on the development side in the residential sector a lot of IRR-driven equity pockets who are coming in, who typically would have focused on office, hotels, or other things in the last 10 years, which also leads to increasing competition and price trends. Whereas on the investment side, it's primarily the lower yielding pockets and domestic addresses who are looking to buy stuff.
Good. And Manuel, you wanted to pick that up?
Yeah, I can also add that you're absolutely right. I have also the feeling that everybody is looking for the same. That means the price is driven in one direction, that's for sure. But due to that fact, it's quite hard to find residential opportunities which are already in place, always 60 months in place. So it's really that we buy developments from the scratch 2 years in advance, and that gains more and more problems for the fund because they need the income, the stable income. And it blocks the money, however is it a forward purchase, a forward funding, no matter. So the money for institutional investors is blocked with no input or no income in general. So therefore it's getting more hard to buy from the scratch, and no projects which will be done in 6 months horizon. Yeah.
Okay, good. I wanted to drill down a little bit into, I suppose, what you're seeing in terms of the capital, Rainer. I mean, are you seeing in general more of an interest across the portfolio of things that you're doing?
Yeah, I think if you look into the PBSA sector in Germany, it's 80% international money that drives the developments. And most of these sources have once started their journey in the UK, have then entered continental Europe, mainly in Germany, partly in Spain, and started their journey through Europe then from these destinations. Yeah, so it's the typical pockets that underpin most of the developments in it. When it comes then to the investment side, it's a blended mix of German pensions, Dutch pensions, Nordic pensions, who are investing in stabilized student housing schemes. And we also see that in the next life cycle phase, let's say, on the young professional living side, where developments are also dominated from international investors who have a track record in this area, whereas then the investment side is dominated by more traditional investors.
Okay, good. Be interesting to just pick up a little bit in terms of locations. I mean, interestingly, Manuel, obviously you're focused on international and not Germany, so that's good. So let's just pick up from you what you're seeing, I suppose, in terms of the European markets. Are some hotter than others? Are there different trends? What are you seeing?
At the end, all markets are hot. So during this time, it's not. We cannot say we have a market which is not hot or under pressure. But the markets are quite special, I can say. When you talk about the Netherlands, I think in Netherlands, there's really demand for new residential opportunities, and a lot of things are under development and going on. If you talk about the Nordics, we see a dramatically increase of the population in the cities. So the people left the north parts, go to the south in the cities, in the centrals, and therefore the demand for residentials, if you talk about a population growth of 10% in the next years, so it's quite dramatically there. So therefore there's really demand in the Nordics, especially in the metropolitan areas. And if you talk about Austria, especially Vienna, it's still a special market because in Vienna, the city of Vienna is still by far the biggest real estate investor and owner of residential products. And therefore, it's a really special thing there if you talk about this market, but the market is growing as well. And if you talk about the other Danube River, the 21st and 22nd district of Vienna, there are a lot of things that are under development and are really, really positive. And our funds are definitely participate in that race.
Okay, good. It'd be interesting just to see whether or not, because obviously during the pandemic, a lot more working from home, a lot more desire for people to have outside space because suddenly they had to stay within their own apartment, potentially, those kinds of things. I suppose, are you seeing a change in terms of demand, Clemens? What are you seeing from the demand side?
Yeah, I think it's definitely true. Yeah? So we see the desire for an extra room, as we call it all the time, driven by Corona, but I think that's only a side effect. I think that the real truth is what happened through Corona and the pandemic is that actually work habits have changed. So now companies actually adjusted their style of working and their requirements, so you are allowed to actually work from home maybe 2 days, 1 day, 2.5 days. So that actually opens, for a lot of employees, actually opens the possibility to take 1.5 hour of travel to work into account because they only have to travel 3 days a week instead of 5. And I think the desire for a garden or whatever was always there. But the conditions, the preconditions that you had by your employment were different. So there's really a mindset shift, there's really a behavior shift, and I think it comes from the employer side that they are opening up and saying, okay, if you're staying 2 days at home and so on, that's fine. And of course, that creates the opportunity for a lot of people to actually look a little bit more outside, so look a little bit more in the metropolitan areas instead of the city areas, because actually it gets a little bit more convenient. And I think this is the real change. It's not the desire for a third room, I think, or for one room more. I think everybody would love to have more space if possible. That's no question. That was always there. But actually now the conditions has changed, and it's actually possible within a fair set to actually operate in that. And we actually see it within our own company, that people who considered from the outside moving into the city, taking the way higher rents and the way smaller apartments, and actually now that they can stay 2 days at home or so, they actually stay. So they, because it's okay for doing that traveling for 3 days or maybe 2 days. That's the fair compromise. And I think this is what's happening, and this is what changed through the pandemic. And I think we see now that like this 5 days a week home office is turned back. We also see, I think, kind of the disadvantages of something like that, but a fair mixture of having like a couple of days in the office, a couple of days in home office. I think this is what will stay for the majority of the companies, and that opens up a huge possibility for everything like which is like surrounding suburbs and so on. And given that the space in the cities is anyways pretty scarce, and it's getting scarcer every day, so there's already a huge pressure for the suburbs. And I think that we just see that actually prices are skyrocketing now in the suburbs, and actually people moving into the suburbs exactly because of these arguments. So just in Berlin we see like 20,000 people last year left Berlin, and only I think 3,000 people moved into, so in negative migration balance, but they all stayed within the metropolitan area. And this is what happens at the moment.
And does that have an impact, particularly on things like the micro-living, those side of things, Rainer? Because you're obviously having to look at development or redeveloping things that are going to be coming into the market in 2, 3, 4, 5 years' time. So I suppose, what of those trends do you think are going to stay with us?
Well, I think we all have gone through pretty new experiences in the last 18 months, and we had to face changes coming from the health and safety side. which we had to implement in the layouts and in the operational processes on our schemes, which works pretty well. And even in the hardest lockdowns that we have seen in our jurisdictions, more than 50% of the young tenants have stayed on the schemes for whatever reasons. Maybe they felt safer than home, or they wanted to be in touch with their friends, knowing that nearly 100% of all universities had changed to online. So there was no need to be present. And going forward, what are the lessons learned from this? I think the processes and operations are vital, especially for first-year students. Parents have a strong influence on selection of accommodation, so parents also have a strong view on it. But it's not only health and safety, it's also ESG-related aspects, environmental, energy efficiency. Do you operate green buildings? These are trends that are now coming very strongly into the focus also of young people when they make their decision where to stay. And on the micro-living side, meaning then the next sector, which is mainly young professionals and to a certain extent long-term commuters, key element still is micro-location. How comfortable is the daily commute to my workplace? Can I absorb home office or non-office times in my accommodation as well? Is that supporting in the way of high-quality Wi-Fi, in the way of co-working spaces, in the way of infrastructure that supports also partly working remotely from a such scheme? And these are the elements that are now implemented and where the respective tenants are focusing on whilst making their decisions.
Okay, good. Manuel, you wanted to pick that up.
Yeah, I want to add that it's not only, there are two main drivers, I can say, which change a bit the market, especially for investors. One driver for sure is the COVID crisis. We talked about the situation with the different home office characters we have in here. But I think the second driver, and this is what you talked about in a word, is the ESG sector, which is much more in focus now. It's not only about this environmental sector, it's all these green-driven, which is quite important for us as investors, all these labelings, but a lot of things are, or a lot of medias are talking about that. One driver for me is quite important, and for all investors, this is the social character we have in here, especially when we talk about the residential sector. For us, it's much more important to have a second look if there are enough kindergarten space. What about the schoolings around? All these areas are also in the focus of international investors already. For sure, it deviates from country to country how these ESG criteria are already fulfilled, but I can say that these for institutional investors getting more and more in focus, and ESG is much more than a green building and labeling. It's all the social character we have around, and therefore we are all responsible, developers and investors, for fulfillment of these social characters as well.
Yeah, it's a really interesting topic that. We launched Impact magazine, so I won't talk too much about it now, but at the end of the session there's copies of those there, but that's certainly a growing trend, I think. And it'd be interesting to pick up maybe in terms of things like affordability, is that a growing, I suppose, a growing concern, but also a growing trend from your point, Clemens? What are you seeing there?
I think it's all over in the media, so it's one of the hottest topics, and especially now before and after the election in Germany. And I mean, if you just look at statistics, what you see, like in the major cities, rental prices over the last 10 years have picked up by 50% on average. If you look at Berlin, 110%. Of course, it's a super hot topic. Just the solution is not that easy. So that's the only challenge with it. I think we see there's a lot of talking and there's a lot of actions taken. It just takes a lot of time, and especially if we see how much like social apartments and so on move out of this social scheme, because I mean in Germany they only stick for like 20 years or so in the social scheme, then they move out and go on the free market. So you have these countervailing effects that actually even social living kind of disappears over time, and we are just way too slow in catching up and building new social apartments. And indeed, it's a big problem, especially if you look at Berlin, for example, adding another 200, 300,000 people over the next 10 years or 8 years, and puts a lot of pressure on the market, and of course also on the social housing market. Yeah? So yeah, I think super big topic. I think the solutions are not fully implemented yet.
I mean, we'll be picking up affordability and those kind of, and especially around the impact fund side tomorrow as well in a session on ESG and impact. But it'd be interesting to get your sense of, from Manuel or Rainer, whether you're beginning to see more institutional capital looking at that affordability side from a social impact side, whether that's as an impact strategy or as an official impact fund, and whether that's increasingly being a topic for the institutional capital, looking at, particularly because obviously you've got different versions of affordability there as well, Rainer. So whoever's view wants to pick that up.
That's a difficult topic. When you talk about affordability, I think Germany or those players in the German market at one point in time will have to accept the truth that even in an environment of strong rising rents, Germany still is on the lower end compared to other European countries. It's always difficult to compare apples to apples when you look across Europe. It's pretty easy because it's more transparent when you look into the student sector. And if you take a market like Munich, top rents here are at, let's say, around 900 euros all in. If you go to Barcelona, nothing available below 1,000. If you look into Lisbon 4 years ago, the average was 450, 500. Now the majority is north of 1,000 euros. Yeah, so talking about affordability, there are markets in Europe that have a completely view on rising rents and the requirements for getting markets back into balance than the situation that we have here in Germany. And I'm still confused by the fact that when we're talking about measures to manage affordability here, we're talking about rent regulation, we're talking about limitations. And here, my feeling is the problem is not coming from the pricing side, it's pretty much coming from the supply side. And as long as the communities don't change view on this and enable in efficient processes in a timely manner to give the developers the chance to increase their span of activities pretty quickly, we will have an issue here that rents will continue growing on double-digit basis on a year-on-year basis for the next years.
Okay, good. I want to come back at some point on that regulatory side, and particularly given your expertise on Berlin, that would be interesting. But Manuel, coming to you, in terms of that impact side, what are you seeing?
Yeah, affordability is always linked to the supply of these residential units. And if you have a lower supply, then for sure it's quite hard to create affordability in a balance with a good rent. So therefore, I monitor, especially in the Nordic countries and there in the metropolitan areas, that especially the local municipality quite earlier made the decision that it's possible to convert quite easily vacant office space to the residential sector. That made it more stable in pricing sector, especially when it comes to the square meter price and linked to the affordability again. And therefore some other countries are one step before the other. When it comes to ESG criteria, I can say also the Nordic countries are one step in front of other countries we monitor in Europe. When we talk about the Netherlands, it's quite hard to find development plots. I think the country is quite small and a lot of people living there, it's quite hard to find these slots, and therefore they have to be creative in order to have some models where you can create new units, and therefore creative in one hand, on the other hand you need to make it affordable still. So therefore there are different open topics. I don't have a solution. If I have, I would travel to Europe and bring everybody the solution. But I can say a lot of things are moving in Europe, but I think nobody really have that clue how we can solve the topic.
Okay, good. I want to drill down a little bit in terms of the kind of locations. I mean, Clemens, you obviously mentioned there that, you know, more people are moving out into the metropolitan areas, those kinds of things. So does that mean also that kind of your views on location are beginning to change and adjust to that, or do you still see that most of this is going to be in the larger cities, not necessarily the more secondary cities? What's your sense of that? Anybody can pick that up. Yeah.
I can say as institutional investors, we definitely have a different view if you talk about residentials than we talk about office sector. Office sector, for sure, we do the big cities, we do the residentials, the office CBD hubs. But if you talk about residentials, it's always the sentence where the people live. And so people live not in CBD areas, and they don't live purely only in the metropolitan areas. They live in the surrounding areas around the metropolitan. So public transport, public hubs are more and more important, combined with the social governance I talked about, with these schooling areas, kindergarten areas, and all these topics. So it's definitely a different investment strategy for institutional investors than we do for office sectors.
I think what we observe, of course, it's still the A cities in Germany and the B cities that have a high attraction. But indeed, what we see that institutional investors shift a little bit because city space is so scarce and there's just very limited supply that actually investors do look more in the metropolitan areas, and also for that reason, so where do I have good transportation, affordability, also linked to own image of the developer, because I know not every developer wants to sell apartments for like 11, 12, 30,000 euros a square meter. So that they go into these metropolitan areas where we have a very strong increase in demand. So indeed, I think C and D cities, totally with you, but I think we see a shift of investor demand from the pure inner city towards metropolitan areas of very strong economics. So like the Berlin area, Munich area, so where we have a very strong economic backbone and a prospering economy, there we see that investors looking outside for higher returns.
And I just wanted to pick up with you, Clemens, that issue around Berlin. Obviously, there was a big view in terms of Berlin. A lot of investors put off by the regulation that was coming in. What's the situation there now? Are investors more comfortable with it? Not more. You know, what are you seeing at the moment?
So I think regulation has been a topic for quite a while. Yeah? So we had the rental price break, yeah? So the slowdown of the rental price increases, which is a German-wide law. We have Baulandmobilisierungsgesetz, which allows actually to stop the conversion of houses into single-unit apartments which you can sell off. That's all German-wide laws. In Berlin, as said, I think the situation is even worse due to this high increase of rents of more than 100% over the last 10 years. So there's a lot of social pressure in the city itself to find solutions. And I think we saw it in additional regulation. We see social protection areas where you can't split up apartments anymore, where you can't increase it to higher standard livings, etc. But we also saw, and I think that's what you're referring to, this rental price cap actually a couple of years ago as a regional law, which actually not only kept the rents, but actually also lowered the rents, the existing rents. And of course that had a huge created huge insecurity in the investor base. New builds were taken out, so they were exempt. So the government tried to protect the new building development. So they want to increase, of course, the number of apartments in the city. But still, I think huge uncertainty. The law got cancelled. It was was pulled back by jurisdiction. So it's gone, and I think since then, what we now see is that the investor confidence comes back. So the demand is back, I would say, to old levels. But the regulation topic, of course, is a topic that is there. And we see it now also after the election. If you look into the election programs, regulation, rental price regulation, is in most of the parties, it's part of their political agenda. So it will come to some extent, I'm sure, but it will be a German-wide solution.
Okay, good. And on the regulatory side in general, I mean, do you see that as a, although, it may, I suppose, lead to a lowering of returns in some way, at least it means that there's consistency in the market, there is regulation. So how do you see that from the investment side? Is regulation, can it be a positive thing for you in some markets? Because obviously it's different in different markets.
I wouldn't say it gives a chance, regulation, but if the regulation is in a limit, I can say, then it's plannable, especially for investors. And I have to say institutional investors are more investors third-party money. So that means if we burn the money for the third parties, it's not the idea of the regulation. I think the regulation should go hand in hand with the investors. And the investors are, together with the developers, the guys who create the residential units and bring the residential units on the market in general. To say, okay, we lower the rental income, it's quite hard to calculate. And especially, as mentioned, if you invest third-party money and all the valuation which is behind to protect the investors is burned in that moment, that isn't the clue at the end. So I would say regulation, yes, but in a way that it goes together with investors in a limited factor.
Okay, good. And obviously there's a big focus on things like the 15-minute city, where you're encouraging mixed use, where there's walkability, livability, and not just, I suppose, in just the very centre of the town, but also creating, I suppose, smaller neighbourhoods and those kinds of things. How important is that? Is that something that is a tick box for you when you're looking at residential investment?
Sure, all the surrounding areas needs to be checked and ticking boxes. I talked about especially the public transport sector, which is much more important these days. I think 10 years ago, we definitely in detail have a look how many parking space and what is the parking space ratio. This is not more in focus. It's more important to have a subway nearby or a bus system which is in place. So this is more important these days. And if you talk about all these kindergarten and schools, and for sure the community around, is the supermarket available? What is the pricing level there? All these things needs to be checked and are more driven or more important for investments than other topics 10 years ago.
Okay, good. And there's around kind of 10-ish, 15 minutes to go. So if you've got any questions, please do bring those onto the live stream. Great to see so many people there. And if anybody's got a question here, do just raise your hand, shout out, whichever means it. The joy of us being live is that we can try and answer that. It will be interesting to pick up. I mean, we've talked about sustainability a little bit there, but do you think there's going to be a move far more towards repurposing rather than purely new build for residential? I mean, we're all talking about the fact that there's a requirement to have more residential, but do you think there's going to be a drive to have more of that as repurposed office space or those kinds of things? Is that appropriate for all of the office types, for the residential types that you're looking at, Rainer?
We do, and we have done so for the last 10 years, but it goes in cycles. Some 7-8 years ago, in our relevant markets, we've seen a lot of office space from the 70s, 80s, who had left life cycles, but they are all now in any other use. We have, I wouldn't say hoped, but we have looked into hotel opportunities, office opportunities as a result from COVID effects, but that hasn't materialized as well so far. And maybe over time, depending on the intenseness of home office trends, there might be office space available, but to be seen. So we focus on both. We do new developments, we do brownfields, and the challenge really is when it comes to brownfields, what is the zoning, what is the status of the building. In most of the cases, demolishing is a quicker solution than refurbishing, and this will be a trend that will be dominating for the next years. But in markets like Germany, where you have more diverse target city base than, for example, in smaller countries in the Netherlands or in Austria, there are potentially more opportunities for brownfields and refurbishments.
Okay, good. And do you have a perspective on that as well in terms of, is there a preference to repurpose rather than go for new build investments, Manuel?
I think both are interesting for us as investors, for sure. But if you talk about new investments, the due diligence might be quite easier. When we talk about the technical due diligence, it's quite easier for documentation purpose. What is with the soil system? What is with which materials are used? And all this needs to be ticked as a box for the green certificates. And if you have a conversion of a property, for sure the location is quite well known and it's an established location. But if you talk about especially these technical due diligence, it quite some problems. And if you talk about the warranty and guarantee system we have at the end, the developers will go out of this warranty and guarantee after the SPA is signed and don't want to follow up 10 years for that. So therefore, it's pros and cons for both systems, and we will do both. But me personally, I have the feelings that this conversion is getting more and more in the focus in the next years, because the green and brown fields are more or less not too much on the market, I can say. And it's making especially regional governments make it much easier in the European countries to convert properties from office, from other use to residential. And this is what we will see and focus in the next years much more.
Okay, good. And looking at residential, I suppose looking at returns, for example, is it really kind of core returns that anybody can expect from residential? Do you have to develop in order to get a sort of higher value add return, or is that more about renovation? What are the opportunities, or really most of the investors looking at as a kind of core steady investment? You don't have to have a view.
It's a difficult question. My feeling is that there are still segregated pockets depending on the risk appetite, and for sure a lot of active investors are looking to tie in earlier to increase their returns. But on the other hand, you have a lot of specialized investors looking for, be it student, senior housing, care homes, and so on, where they take an active role in that niche and provide development capital and have pockets for investments or operating assets, and by combining these, benefit from higher returns on a blended basis over their different pockets.
Okay.
I think in the current price sector, the residential sector is also a bit a bet on the future, I have to say. So now the pricing is really sharp, but if you believe in the sector, if you believe in the property itself and in the micro locations, then I'm quite sure it's a bet for the future, because we all know that residential getting more and more important in the future. And if you have now really sharp pricing, I'm sure in 5 or 10 years it's a bet for the future, the returns. Yeah.
Okay, good. I wanted to pick up on kind of the opportunities, really, where we're seeing those at the moment, just in the kind of last 5 or 10 minutes. And again, if there's a question, now's the time to ask it, not after we've. Oh, you've got one. There you go. You see, I knew that would elicit some sort of response. Let me just bring you this. Go ahead.
Working?
It is.
It is. Okay. Thank you for that. Let me put it brief to you. As a starting point, we have all the same problems and opportunities, shortages, low interest rates as banks, loads of opportunities. Some countries are further in the process than others. Is it safe to say, to your opinion, I don't know which three of you, but maybe you have the same opinion there, I'm curious, that most investors will be looking at, because we're all looking at the same, like you said before, we'll be looking at longer term yields now, because the short-term yields, it is impossible to keep it increasing at the lower rates of the banks. But on the other side, it's impossible to let these rents raise and raise and raise. So the short-term yields, to my opinion, would be sort of blocked. whereas the long-term yields might be in some positions, some parts of maybe the Netherlands, like you said before, compared to Germany, would be more interesting for the longer term.
Yeah, I can say as investor side, it's a long-term bet on the futures. This is what I mentioned. So short-term investors are not too much on the market for residential, I would say. So to buy, to renovate, to sell, for sure. But at the end, if the property is there, the investments and the bet on the yields for the future might be more interesting. So I think investment horizon for 5 to 10 years, which is originally used for office, is widened up for 10 to 15 years, I can say, for resi sector. That cause investment problems for the future due to the fact that not too many products will on the market gain the problem that everybody is looking for the same. So yeah, you're right.
A lot of investors, like I'm coming from the Netherlands, they were there for for short-term profit, because these the real estate is like going steep. But with this transformation sector coming on to the market now, there's more professionals into the market than like in the Netherlands. There's a lot of buy-to-let going on with the non-professionals actually. So I might suggest you would be in there for a longer term. So a more stable market to maybe expected.
Great, thank you. Does anybody else have a question? So let's just come to my kind of last one, given that we've probably got about, I haven't checked, but I would imagine we've got around 5 minutes left. So let's just pick up with the last one, which is just in terms of I suppose key trends, what we're seeing. You can pick one or a couple depending on what you want to do, and I suppose where the investment opportunities are, you think at the moment, and you can choose that as a specific sector within residential or a location, wherever you would put your money, I guess. Let's start with you, Clemens.
Yeah, so I would still look for like a sharp imbalance between supply and demand, and I think Berlin, Leipzig are fantastic cities where we see like this in this kind of topic fantastic. There's a sharp imbalance for years now between supply and demand, which you can't fix quickly given the growth rates. So I think these are cities that are, in my view, super hot, city center, especially in Berlin. It's the German capital. It's the capital of the largest economy. It has a strong economic vibe at the moment, very digital vibe. We have now 5 DAX companies. 10 years ago was 0, and 3 of them are digital companies. So we see that there's a lot going on. So I think that the city will continue to grow and the wealth will also accumulate. And at the same time, the metropolitan areas, especially in these growing markets, because I mean these metropolitan areas offer the affordability for the people who are not financially as strong as other people. So I think, these economic boost towns, Berlin, Leipzig, I think we will see them to continue. And I would totally agree with the guest from the audience. Yeah, it's a long-term view. Yeah, you have to have a long-term view. Otherwise, I think it's very difficult to justify. But if you have that, then I think you're on a good path.
Okay, good. Rainer.
Product-wise, I think we will have an increasing trend to concept-based, curated, living types of products, which is also going along with a trend to smaller units, which also reflects the demand for high quality of living, but it needs to be affordable, which normally doesn't translate for singles into 100 square meters. As regards markets, we see a very strong trend to quality focus, and quality in this context is defined as the combination of economical attractiveness plus leisure, culture, climate, and other amenities. And in our sector, for example, to give you one is Prague. We have opened a scheme in Prague last year where 90% are non-domestic students, and they're coming from 70 countries. The biggest population in Prague on our 600 beds scheme is Spanish. Yeah, I see a lot of eyebrows going up. Yeah, it is the case. Yeah, and the same in Berlin. Our scheme in Berlin has some 40% Spanish and Portuguese and Italians. Yeah, where's that coming from? That's coming from the fact that Germany and CEE markets are way more affordable for young people as education spots than, for example, the UK. They provide a higher attractiveness long term than their home countries for economic reasons. So a lot of young people come to these countries with the hope and the idea to find a job afterwards or to continue their employment career in these markets. And this is embedded in, if you look at the Erasmus statistics over the last 10 years, and what are the most sought after Erasmus spots in Europe. It started years ago with beach destinations and has now transformed into quality of life destinations in the way that I just described. What is quality of life behind it? And I think this trend will continue over the next years and will drive then also requirement for accommodation in these various markets strongly.
Great, Manuel.
Yeah, I don't want to give too many insights what I'm focused in, because I think all investors are looking for the same at the end. No, not joking. I think what is really interesting, and this is what I want to repeat, is especially when we come to the Nordic cities, the metropolitan cities in the Nordics, what I'm fascinating on is that there are 2 or 3 steps in front of other European countries when it comes to ESG criteria, especially not the green criteria, the social criteria I talked about, especially Norway, Sweden, but also Finland. They are really keen on the social factor when it comes to all these surroundings, public transport, all these facts. So this is also, or this is still very interesting for me and for us as investors. Second thing, what I'm really fascinated in, and this is what I'm really focusing in, is the creativity of the Netherlands. The real estate developers in the Netherlands, what are they creating with low supply or with low demand, and all these conversations and how you use the space, which is quite not too much on the market. So therefore the Netherlands on one hand is quite interesting due to the creative sector, the Nordic metropolitan areas due to the by far more steps as they've gone with the ESG sectors.
Great, thank you very much. Really interesting discussion there, really good to get everybody's views. We've got a whole series of program of events happening this afternoon and this morning. So we'll be looking at, for example, we'll be looking at winning cities, we'll be looking at sustainable logistics, real estate next. Also Germany investment briefing will be coming up. We'll be looking at debt, Netherlands. So for those who are interested in the Netherlands, there'll be sessions on those as well. And we'll finish with a kind of European real estate outlook. So if any of those are interested, do come back again to visit those. The live stream will stop now for around 10 minutes, and then you can join us again for the sustainability logistics session. Thank you for your questions. Thank you for comments online as well. And if you could join me in thanking the panel and yourselves, that would be great. Thanks very much, everybody.